And good evening. We're doing it live right here on 790 KBC. Mottek On Money on the air, live right here on 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast for you at kbc.com, Apple, iTunes, and all your favorite podcast platforms. Well, here comes the rain again. Made it rain on Wall Street today. Wall Street clawing back from that sell-off we saw in the previous session that sent the S&P 500 to its biggest one-day drop since September yesterday. But today we did see a comeback with the Dow roaring back 322 points. The S&P 500 finished nearly 50 points higher, and the Nasdaq gained nearly 200 points at the closing bell. We did see the latest numbers on the economy today, helping stocks regain some footing today. The Labor Department said jobless claims, for example, up 2,000 to 205,000 in the week that just ended. Economists had expected new claims to total 215,000, so that reading came in a bit better than expected. And the latest reading on economic growth, the third quarter GDP number, was cut to show the growth at 4.9%. The previous estimate was 5.2%. Taking a look at mortgage rates, well, here's some good news for you. Falling for the eighth week in a row and staying well below 7%. After hitting a 23-year high earlier this year, the drop in the 30-year fixed mortgage was the biggest in over a year, the 30-year averaging 6.67%, according to the latest survey from mortgage giant Freddie Mac, and the 15-year fixed now at 5.95%, down from 6.38% last week. We're keeping an eye, of course, on what's happening in the Middle East, as well as the Red Sea, with the Red Sea diversions by shipping companies, including Maersk, continuing because of the risk of attacks by the Houthis, the Iranian-backed militia group. Global logistics managers now face it with a two-front storm of rising ocean and air freight prices, as well as stranded cargo. I'll discuss what's happening in the Middle East tonight with prominent Los Angeles attorney Richard Sandler, the former chairman of the Jewish Federation of Greater Los Angeles and the author of Witness to a Prosecution, The Myth of Michael Milken. Richard Sandler will be joining me live later this hour. Also, we're watching what's happening with the elder care these days. It turns out California is the worst state for elder abuse protections, according to a new study. Another heartbreaking report says nearly 100 senior patients in recent years have died after wandering away from assisted living facilities, including some here in Southern California. I'll discuss that tonight with elder law attorney ZORAN BASICH at basichlawgroup.com. But first, on your money, the markets, the economy, this nice rally today and the holiday season. Let's bring in Jim HAUSBERG now, Managing Director at Hightower Advisors here in Beverly Hills. Jim, thank you very much for joining us on an update here. Happy holidays to you, and thanks for coming to the line. Give us your view of this latest market action here, first of all.
Well, first of all, happy holidays to you, Frank, and all of your listeners. It's been quite a market the last 7 or 8 weeks, Frank. The returns have been something you could hope for over a 12-month period, let alone, 6 to 8 weeks. But this is all based on one thing, and that is lower interest rates and comments from the Fed recently. So rates have been coming down. Stocks have rallied, just the opposite of what happened in 2022 when the inflation readings were incredibly high and rates went up to slow inflation down. Fed kept raising, went from 0.5% to 5.5%, and equity markets were down in the 20s. Many equities are down in the 40s to 50%. It's totally flipped. And again, it had a good start to the year, sold off. A lot of people thought rates would stay higher for longer, but based on Fed comments, based on data coming out on the economy, we now have a 10-year Treasury in the 3s. 6-8 weeks ago it was in the 5s. That's a huge move, Frank, much bigger than people recognize, because people look at equities and they don't realize that the bond market, has a big impact as well on where equities trade. So we've had a great market. It's still based on certain sectors, technology, communication, and consumer. There's plenty of sectors that are down. And the question is, will they play catch-up in 24? And I believe they will.
On the live with Jim HAUSBERG, and we've seen that great rally on expectations, as you mentioned, by the Fed to cut rates in the first half of 2024. But as we've seen recently, the Fed speaks with various voices, with many voices, with various Fed officials trying to, in some ways, take the punch bowl away following this rollicking Santa Claus rally here. What do you think? Where does the truth lie here as far as what the Fed is going to do in the new year?
Well, there are futures contracts that trade on Fed funds rates, right, as they do with the S&P and other bonds. And when you look at where they are trading, regardless of the comments by Fed officials or not, some of these indicators have the Fed cutting 6 times next year, and we could be into the mid-3s to low 4s. Others think it'll be 3 times back into the low 4s, mid-4s. So the market is telling you the rates are going to be cut quite a bit. Let's remember, the rate cut comes from a couple of reasons. One is lower inflation, which we're seeing now, but we don't know where that's going to lie. And 2 is, how is the economy doing? So there's a lot of, global economists out there, people we read, who are calling for a recession in 24, which would bring rates down, but it could also bring earnings down. So one has to be careful as we move forward, not to get too excited about lower rates, but the reason why. And if it's lower inflation, I think we're in good shape. If it's because the economy really slows, and then you got to be careful because earnings will then start coming down. So this rally has not been based on earnings, although there have been some good spots, but it's been based on PE expansion, price earnings multiples expanding as the bond market has rallied with the lower inflation.
It's been a stomach-churning year for a lot of people with those bank failures earlier this year and talk throughout the year of a recession that was never officially declared and apparently never came based on that GDP number, again, that we were reminded of today, which came down from 5.2. It was revised slightly lower, but certainly a long way from a recession. But a lot of young people, I don't know if you've seen this on social media, one of the trends lately, silent depression. The U.S. economies remain remarkably strong, but affordability worse than it's ever been. And some social media users say even when compared to the Great Depression, they've coined the term silent depression. So what is the mood out there among the folks that you see out there on the front line?
Well, Frank, it's a good call by these younger people. It's a mixed bag. There's no question about it. There are people who are, if you want to say that the divide between the have and the have-nots is getting wider. That was what, 2009 was all about, the 99 and the 1%. Unfortunately, I think that continues, so I understand the way young people may be viewing this. But when you look at the amount of jobs that were lost during the pandemic, we were 30 million unemployed. The numbers are way down. So we're back in the 3.5. It was up to 9 or 10, 11%. So, it depends really on where you're working. If you're working in the tech sector, you're doing pretty well. If you're in, certain retail, probably not so good. But it's not easy out there. And I definitely have said for years, even with the inflation data that we look at, it costs a lot more money, to live than I think the data indicates, especially in real estate, especially here in Southern California and in other parts of the country. So, people have to work hard and, give it time and be patient in their careers. And I think America is still the place to be. But I understand the silent depression that people are talking about. Makes sense to me.
Very interesting. And now the Fed is out with its new inflation reading first thing tomorrow morning, the November Personal Consumption Expenditure Index, which we're told is the Fed's favorite inflation gauge. Are we expecting any surprises with that tomorrow? And is the inflation genie back in the bottle here?
Well, the Fed wants to get to that 2.5% number, Frank, or 2.5, and they're still a ways off from that. So it's hard to say. But I would say this, not to root against markets, if the inflation numbers come in higher, that might lean on the Fed not easing. I can't say they would raise again. That seems to be sort of out. But that would have a negative impact short term on markets for sure. So we'll see what the number is. A lot of this data is looked at, and you get a quick move one way or the other. Like people asked me yesterday, hey, is this the start of the correction when the markets were down 1 to 1.5%? And today it's right back to where it was 2 days ago. So the short-term nature of the business is incredibly volatile. But again, over long-term for all investors, I think we're in a pretty good environment. You can still buy bonds, not at the high rates that they were, but still very attractive positions in corporate bonds and high-yield bonds. You can get returns in the 6 to 9% area. Treasuries, are back in the 4s, low 5s, and that's probably coming down. I think dividend growth stocks are a really good place to be. Companies that are increasing cash flows, increasing earnings, and paying out dividends, not necessarily high dividends, but the dividend growers, which got hurt last year, Frank, with rates moving up because they were acting just like bonds. To me, look to be a very attractive place right now as rates continue to come down.
Well, I admire you. You got a strong stomach for all of this, and have kept us well informed throughout the year. And there was a time this year when both stocks and bonds were down, and mercifully the bond market rebounded, and that 60-40 portfolio wasn't looking too good. But now that seems to be in fashion as well. I don't usually talk too much about the bond market because I don't want to put the audience to sleep, and I know you don't want to either. But what about that 60-40?
Well, here's the thing. Look, yeah, the 60-40 looks good right now, and I think I was on, several weeks ago, and I said, hey, if we start getting better inflation numbers and with where rates are now, it's a good time to buy bonds, and it has been. I mean, there's been a big rally. Not only have people locked in good returns in the, let's say, 5 to 7 range, but they're looking at their portfolios and saying, God, my bonds are up 4 to 5, 6% and more in some cases. So, yeah, it's a little boring, but here's the thing. For such a long period of time, Frank, and let's back off 2 years and go back, 8 to 10 years from that, there was no return in bonds. There was no return in safety. So for people who were savers, it was very, very difficult. And I think savers were forced to take risk in equities and alternative investments, and those did well for a while. We had a down year in 15, I believe. 18 was the fourth quarter wasn't so good. Obviously, 22 was a nightmare for both stocks and bonds, and people were taking risks that they, weren't getting paid enough for. Now you turn into this year with rates coming down, the lower inflation, bonds have done well. The 60-40 is in good shape, and I think it's in good shape going forward. Again, got to pay close attention to, the earnings that start coming out into next year. And where to be in the market's never easy. What I always find interesting, Frank, and don't want to go too long on this, is that the S&P is an index of 11 different sectors, but it's market cap weighted. So the larger companies have a bigger impact. And right now, technology led by, say, Microsoft and Apple, consumer services like Meta and Google, and consumer discretionary like Amazon, Tesla, they're dominating the market. 30% of the S&P is based in those names, and those names have had 40 to 50% moves this year. So look for areas that have underperformed. Energy's way underperformed, utilities, the dividend payers, and I think that could be an area to look at next year. Wouldn't be surprised to see technology up, but not nearly as much as it's been up in 23.
Right. The Mag 7 led that rally with the AI so much in focus, looking back over the past year. What about those names heading into the new year?
Well, I think it's here to stay for a while. So it's just a different part of tech. NVIDIA, which is the chip maker, it's everybody's favorite. The earnings have been through the roof. Intel is an old-time favorite, has made a big play in AI, and that's come back. AMD. So the chip makers are I think, poised to do pretty well. A competitive space, and they tend to be a little cyclical, but the push into AI is good. Microsoft, I think, is probably the best play in that space with the investment they made in ChatGPT. There's probably other plays. There's a lot of talk in the venture capital space about AI type of investments, but it's a little early yet. But I think if you want to play AI, NVIDIA and Microsoft are probably your best bets, the largest ones, and they're both very, very well positioned.
All right. I know you're not a big gold bug, or I don't think you have the laser eyes on, too, following the cryptos that closely. What about gold and crypto? It was curious to see gold hit a record high recently, just as inflation supposedly was easing. And then we saw this big rally in the cryptos with Bitcoin up around 44,000, still well off its all-time high, but certainly an impressive rebound this year. What about gold and crypto here?
Yeah, so the crypto is too hard to understand. I've said it many times. People say there's, it's a lot of laundered money, dirty money, moving it up. People talk about the war in the Middle East and money's moving around in Bitcoin, and that's how things are getting funded. And these are all wild speculative things, and people are talking that's why Bitcoin's higher. As far as gold goes, I've always struggled with it because, obviously outside of, making jewelry and things like that, there's not a lot of purposes for gold. But gold has just always been this safe haven, higher inflation, this hard asset that people tend to, move towards in times of panic and uncertainty. So it's had a good move. But my problem with these types of investments, whether it's Bitcoin or gold, silver, and any other commodities, is when do you sell them? They make a certain move and then they sell off. Oil's another commodity. So the commodity business in general, which I think Bitcoin falls into, is very, very tough to call. And, to me, they're more trading vehicles. You buy them when they're out of favor and sell them when they've made big moves. But It's tough to figure out. Maybe one day we'll understand Bitcoin better. Some people look at Bitcoin and say it's the gold of 200 years ago, and we'll understand it more down the road. So we'll see, but not really for most investors, I don't think.
All right. Well, we will continue to follow the gold chain as well as.
So right now may be the perfect time for you to rethink how you pay for health care. And here's why. Not only is it open enrollment for a lot of people, it's also a time you can join MediShare and save even more than usual. For many families, switching to MediShare saves about $500 a month, which is a game changer for a lot of people. And what's more, they like it. MediShare has double the member satisfaction rate compared to health insurance. Double. MediShare is a proven thing, too, for over 30 years. It's a Christian community of more than 400,000 members. And here's the thing. If you join before December 30th and you mention the promo code SHARE, you'll get another 10% off all of 2024. That's 12 months of savings. So I'll give you the number here in a second, but call. You'll get a price within 2 minutes. And again, the deadline is December 30th. So call now. You'll save even more. Here's the number. 844-43-BIBLE. That's 844-43-BIBLE. 844-43-BIBLE.
Susie Schuster and Amy Trask present offbeat conversations and expert sports commentary as they ask, what the football?
Carson Wentz got signed by the Rams.
I sat in those league owners meetings for almost 30 years, and the trade deadline was a hot topic. Push the trade deadline back so that teams that are in contention still have an opportunity to sign people. And there were other owners who said, no, we don't want players rented and we don't want fire sales. They had to make an addition, and they chose what they thought was best. I'm just not wowed by him.
What the Football? The podcast is available Tuesdays, wherever you listen.
Blockchain here on this program. We do talk to the biggest fans of crypto as well as the harshest critics, so want to give the audience a balanced view here. At this point, Jim HAUSBERG, where are you putting money now and or taking it off the table heading into the new year?
Yeah, so we are looking at companies that are increasing their cash flows and thus increasing their dividends. You know, when you look at the S&P 500 as an index, and you look at the earnings and the dividend growth, not all fall into that positive area as far as I'm concerned. So there are individual companies that I think are the best ones to own for the long haul, and those are the ones that are increasing top line, increasing bottom line, managing their capital structure in terms of equity and debt. And at the end of the day, the ones that are increasing those cash flows are the ones that are going to increase their dividends. And it's not as if we're going to get a huge yield in the dividend, but the highest quality companies are those types of companies. And I think Microsoft falls into that more than any. And many others. Broadcom is a great dividend increase. Intuit, who makes Quicken software. You look at some of these companies that have increased their dividends in the neighborhood of 10, 15 to 20% a year. And those are the best performing stocks that we've seen on a consistent basis. So I can talk more next time about some other names, but I would look for dividend growers, and then I would also look at dividend payers that are pretty high. So maybe some of the energy stocks, utilities, which are way out of favor, some of the real estate, all will benefit from lower interest rates. And those that pay those dividends, I think are going to get good performance. And I will say that over the last 6 to 8 weeks, that's exactly what's happened.
All right, Jim, thank you very much. I thought you were going to say invest in umbrellas. Today was the day for one here in right? Wasn't that something? I saw people at one of the drugstores today buying like 5 umbrellas. They're doing big business today. Well, Jim, thank you very much for taking the call. We wish you a wonderful holiday season, a happy, healthy, and prosperous new year to you and everyone there, and look forward to many more conversations in 2024. Thank you very much for taking the call here tonight.
My pleasure, Frank, and best of luck to you and all your listeners.
Thank you very much.
Holidays.
Likewise, Jim HAUSBERG, Managing Director at Hightower Advisors, the HAUSBERG Group in Beverly Hills. Folks, people like you and me have our ear to the ground on all things business. We like to be informed and well prepared. As important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destinations that they might not have a plan in case they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. ABC welcomes Kenny Wayne Shepherd coming to the Canyon in Oxnard April 19th. Tickets are on sale now at AXS.com. Right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Tickets furnished by the Canyon, where music meets the soul. Call now. Caller 9 wins 1-888-790-5222. Mottek On Money continues here in 790 KABC. The Dow moving higher by 322 points, back to 37,404 following that big one-day sell-off we saw yesterday. Breaking that, what was a 9-day rally we had. S&P 500 at 48 at 4,747. And the NASDAQ gained 186 at the bell at 14,964. The yield in the 10-year note is back down to 3.88%. Mortgage rates moving down for the 8th week in a row, staying well below 7%, providing a much-needed boost to real estate out there. Bitcoin pulling back about $100 now at 43,896. Ethereum down 6 at 2,242. And Doge hanging in there at 9 cents. It was stuck at around 6 cents for most of the year, then hit 10 cents recently, right now at 9 cents. The price of oil pulling back down 33 cents at 73.89 a barrel. Nervous time in the Middle East, of course. We're watching developments there. We'll be discussing those developments here shortly. Taking a look at some of the movers today, shares of NIO, the so-called Tesla of China, moving up nearly 5%. As investors appear to shrug off a report in the Wall Street Journal that the Biden administration is considering raising tariffs on electric vehicles made in China. Micron Technology, MU, jumping nearly 9% after that chip maker's results came in better than expected. Intel also moved up about 3%. NVIDIA shares up nearly 2%. And shares of Carnival Corporation, the cruise line giant, jumping more than 6% today after the cruise line reported fourth quarter results that beat analysts' expectations, and they provided an upbeat full-year profitability outlook. Mottek On Money continues here in 790 KABC. Good evening. Turning now to the Middle East. Israel today formally rejecting a Hamas demand to permanently halt fighting before releasing any more hostages being held by terrorists in Gaza, as talks in Cairo for a truce deal appeared to make little progress, according to the Times of Israel. A Hamas official told the French news agency that a, quote, total ceasefire and a retreat of the Israeli occupation army from the Gaza Strip are a precondition for any serious negotiation, unquote, on a hostage prisoner swap. Israel has repeatedly rejected any such proposition, and Prime Minister of Israel Benjamin Netanyahu repeated today that the longstanding position in no uncertain terms, he said, we are fighting until victory. Joining us live now, prominent Los Angeles attorney Richard Sandler, Executive Vice President of the Milken Family Foundation, also the past chair of the Jewish Federations of North America and of the Jewish Federation Council of Greater Los Angeles, author of the book Witness to a Prosecution, The Myth of Michael Milken. He was recently honored at the second annual Jewish Journal Gala for advancing the American dream. Richard Sandler, thank you very much for taking the call here this evening.
Great to be with you, Frank.
Wonderful to have you with us. And the last time we spoke was in October, not long after the horrific October 7th Hamas terror attack on Israel, which began the October 7th war, which continues. Give us your reaction to the latest news here tonight.
Well, it's not really surprising. I think that Israel is making strides and progress to what they're trying to do and eliminate Hamas. Hamas doesn't want to be eliminated, so they would rather use whatever leverage they think they have because of the unfortunate situation with the hostages to get release of people who have committed murder in the past and get Israel to have a complete ceasefire and withdraw. But that's just not going to happen, and it's unfortunate, and we'll all be better off when this part of the war ends. But I think Israel has to finish its mission.
You've probably seen the latest reports. Israel continues to be under attack. 2 Israeli civilians wounded today in an anti-tank missile attack from Lebanon on the northern side of Israel. We're following those developments as well.
Yeah, I think we're all looking at it. It's, any time that life is lost, it's a tragedy, no matter whose life it is. But when you think about what the soldiers and the citizens of Israel have been through over the years, from these different attacks, they right now have to do everything they can to prevent anything like that happened on October 7th from ever even being thought about again. So it's a very unfortunate situation, as it's been in certain wars that our country has been involved in over the years.
Certainly. Give us your reaction to these latest anti-Semitic incidents here in Los Angeles, where a prominent Jewish man was attacked in Beverly Hills recently. Police quickly arrested the suspect in that case, and we've seen all kinds of crazy incidents happen recently.
Yeah, in October we talked about this one a little bit, Frank. It's a tremendous concern to our community, to all of us, to our kids, our grandchildren, that anti-Semitism has raised itself to the level that it has right now. What happened on October 7th had nothing to do with political issues that are going on in the Middle East, some of which are very, very complex. It had to do purely with anti-Semitism and killing of people. And the fact that attacks are going on in our own city of members of our community who are walking down the street.
So right now may be the perfect time for you to rethink how you pay for health care. And here's why. Not only is it open enrollment for a lot of people, it's also a time you can join MediShare and save even more than usual. For many families, switching to MediShare saves about $500 a month, which is a game changer for a lot of people. And what's more, they like it. MediShare has double the member satisfaction rate compared to health insurance. Double. MediShare is a proven thing, too, for over 30 years. It's a Christian community of more than 400,000 members. And here's the thing. If you join before December 30th and you mention the promo code SHARE, you'll get another 10% off all of 2024. That's 12 months of savings. So I'll give you the number here in a second, but call. You'll get a price within 2 minutes. And again, the deadline is December 30th. So call now. You'll save even more. Here's the number. 844-43-BIBLE. That's 844-43-BIBLE. 844-43-BIBLE.
Where leaders go, learning follows. At Harvard Business School, we offer in-person and virtual executive education programs on a broad range of business topics. This is where the brightest minds in business come together. Add your unique voice to an exceptional peer group. Come learn from others' diverse perspectives and from our world-class faculty. It's your time. Go. To apply, visit hbs.me/go. That's hbs.me/go.
Is really scary. I mean, I remember hearing somebody comment on a news show a few weeks ago. They just gotten back from Saudi Arabia, and they feel more safe walking down the streets of Saudi Arabia wearing a kippah or a Jewish cap on their head than they do the streets of the United States.
Isn't that something? Well, certainly in Beverly Hills, they take crime seriously there.
Yes, they do. And hopefully we'll start taking it more seriously in Los Angeles than we have. But I know Beverly Hills is doing everything they can, and they got on this very quickly, and they arrested the person.
Certainly, the Milken Institute has provided a magnificent global forum on all of these issues, and I'm sure it'll be a magnificent global conference again in the year ahead. And speaking of that, want to mention your new book, Witness to a Prosecution, The Myth of Michael Milken. It received a very positive review again in the Wall Street Journal just recently by Charlie Gasparino, providing the latest positive review of the book, noting that when you digest the reality of the case the government made against Michael Milken, you find that much of it was nonsense. I know in our previous conversations, you've tracked Michael Milken's 30-plus year legal odyssey and conviction. You called it an injustice on a biblical scale. Tell us more about that and what people need to know about that.
Yeah, look, I lived through this, Frank, for over 10 years representing Mike. I'd worked with Mike before that. I've known him for many, many years. I know what kind of person he is. I know that there's no chance that he could be guilty of any of these type charges that they had. And I lived through a process where I saw what the power of the government and the prosecution is. That when there are political motivations, prosecutors have tremendous tools at their dispense in which to indict people and to bring tremendous pressure on them. And it was quite a odyssey for us all. So I decided some time ago, and I'm glad I finally did it, that Mike has done so much good in the world. He is so well known. He's still a public figure, and nobody knows the truth because everything that was written at the time about what was happening was not true. It was written by people that didn't know anything. They had no direct knowledge. They were reporters. They were writing books. They had their own motivations. And I just think that the truth needs to be told. History needs to know what really happened. And there's also a message here for people today that they got to be careful. The government has tremendous power in any criminal prosecution. It is not a level playing field. And the book goes through what some of those tools are, how they were used in our case. But the book also describes, what did Michael Milken really do? What did the court really find? What did he plead to? And I think people have been really surprised to learn that it was a bunch of regulatory technicalities that had never before been the subject of any criminal prosecution. Yet they put tremendous pressure on him. They leaked things to the media. Tremendous pressure was put on his family. His brother was indicted for no other reason than he had the same last name. And we were able to bring the case to an end with, unfortunately, a plea. But it's time for the public to know who Mike is and what he really did and what happened. That's why I wrote the book, and I stand by everything in there. It's supported by court documents. It's supported by quotes from the government lawyers who were involved at the time, who spoke to me at a class that I taught at Stanford many years later.
That's fantastic. And it should be noted, Michael Milken received a presidential pardon in 2020, and what he's done in the world of philanthropy is amazing, and advancing medical research. We had the privilege of speaking with him during the last Milken Institute Global Conference after he wrote the book Faster Cures with Jeffrey Evans Moore, and discussed the book on this program earlier this year. Anyone who wants to hear that can bring up the Mottek On Money podcast. And fast forward to 2023, refresh my memory, wasn't Rudy Giuliani the prosecutor back in the 80s, and today Rudy Giuliani filed for bankruptcy?
I read that today. I'd actually heard from some people that asked me my reaction. Look, my reaction is what happened, and it was unfortunate, and I thought that the way that Mr. Giuliani acted way back when on Mike's prosecution was wrong, not fair. Whatever happens to him today has nothing to do with what happened before. It doesn't undo what happened before. So it's not, my nature is not to wish any harm on other people. But, he has to deal with what he has to deal with. And I saw that did happen today.
In the meantime, Michael Milken certainly has tremendous support around the world. And again, bringing us all together at the Milken Institute Global Conference is quite an achievement right here in Beverly Hills. And everyone is very grateful for everything he's done here. So thank you very, very much for taking the call here tonight on all of these important issues, and look forward to many more conversations in the new year. Richard Sandler, thank you very much for joining us live here tonight.
Well, thank you, Frank, and I look forward to continuing the conversation. And I appreciate the opportunity to bring the truth to everybody's knowledge.
Thank you very, very much. Happy holiday season. Happy, healthy, and prosperous New Year to you. And that is Richard Sandler, who formerly chaired the Jewish Federation of Greater Los Angeles and the author of the book Witness to a Prosecution, The Myth of Michael Milken, which was just, again, positively reviewed in the Wall Street Journal by our friend Charlie Gasparino in an op-ed article. Thank you again very much for joining us. Folks, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still we can get caught off guard as people are so focused on their destination that they might not have a plan in place in case they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. 833-88-SHARK's the number, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. Good evening. It turns out California is the worst state for elder abuse protections, according to a new study. And another heartbreaking report out says nearly 100 senior patients, many with Alzheimer's disease or other mental impairments, have died after wandering away from their assisted living facilities in recent years. according to more than 100,000 state inspection reports analyzed recently by the Washington Post. Some of these incidents are happening right here in Southern California. Joining us live now, elder law attorney ZORAN BASICH at basichlawgroup.com. ZORAN BASICH, thank you very much for taking the call this holiday season on these heartbreaking reports. Give us your reaction to this latest news here tonight.
Frank, thanks for having me on, first and foremost. It's really actually upsetting to read and listen to what's going on. Basically, we're probably the largest and wealthiest state in the union, and we should be doing a much better job of taking care of our seniors. But at the end of the day, these are the holidays. It's an opportunity to get a look and see what's going on with your loved ones. If you have someone in a facility, a nursing home, an assisted living, a board and care, you really want to make sure you go in and take a look and see how things are being done, how well they're being treated. Are they being left alone? Are they being left to basically be thirsty? They are not getting their bedding changed. No one's responding to their calls. Whether it's really very, very important that you have an idea as to what the loved one is going through, because you can make a difference by simply being there to make a complaint. And a complaint will get you a long way further down the road in terms of the care they need.
Quite shocking to hear that a lot of people, elderly patients, wandering away from these facilities. Don't these places have a responsibility to make sure that their places are secure and that the people that they're cared for are being watched after properly without wandering off?
Yes, and they actually have security systems in there, in theory, that work. That basically, if the door is opened or if the door to be opened, you have to open this lock and not open that lock to make it a little more complicated so they don't simply walk out. But in spite of that, we've had over 100 people who have walked out and frozen to death or gotten basically the elements that have killed them, which is really unnerving and frightening. And the bottom line is it's unnecessary, can be avoided, and they need to avoid it. So, again, if you're going to go over there, take a good look at your family situation and see if they are being cared for well enough that they're not going out the door. If they're going near the door, what I always find when I go into a nursing home is that right by the door where everybody kind of hangs, waiting to see if there's an opportunity for someone to come pick them up, they want to go home. Can't blame them. You'd want to go home too. I want to go home. Everybody wants to go home. But sometimes there's no one at home to take care of them. But at the end of the day, you still want the best possible care available for them.
Something that you brought up in the past, which I think should be repeated. What if your loved one says, I want to go home, and they try to check themselves out of the facility, or they try to convince the family, oh, he's going to come home or she's going to come home now? How should the family react to that and have somebody potentially come out of a skilled nursing facility to a home environment? That's pretty dangerous, isn't it?
Very dangerous. The problem is that if you have an opinion and you're still alert and oriented, you can basically render your opinion and someone can't just place you there. Think about it another way. If you were getting divorced, rather than go through a divorce, you just simply put your loved one in a nursing home and leave them there for a while, see if they chill out a little bit. That's kind of the same situation. The theory is you don't want to put someone in a nursing home unless they need to be there. And if they want to leave, unless there's a conservatorship or some kind of court structure keeping them in play, they should be able to go home. So the concern I always have isn't really that the loved one wants to come home because they forget, they get busy with other things. But the facility wants them out of there because they're not getting enough money, or they're not getting paid on time, or they're just not happy with the patient because the patient's complaining too much. And so they tell you that you need to come pick them up. If that's the case, I really want your listeners to understand you need to say no. There's no reason for them to evict them, and if they try to evict them, it's probably a year-long process. It's certainly not going to be tomorrow. And often what they do is they call you on a Friday night and say, pick up your loved one, they're ready to go home, when no one at home is ready to take care of them.
That is a very, very important point. We're on the air live with elder law attorney ZORAN BASICH. And what are some of the red flags, ZORAN, of nursing home abuse that people should be aware of and certainly be alert to and take action on?
Four of the things that we find critical all the time are dehydration, which basically goes back to water. If they drink enough water, we don't have any of these problems. The problem is no one's there to make sure they drink the water because of understaffing. So the first premise is the staffing is not sufficient. Second problem is they don't give them water that they make sure they drink, so they become dehydrated. With a dehydration situation, they become UTI, urinary tract infections. Now they're infected. Now they've got problems with antibiotics and issues of that nature. And before you know it, you've got a real problem on your hands because someone didn't make sure that the water they need to drink has been drunk. So again, these are not sophisticated medical malpractice problems. This is really just simply, hey, make sure mom or dad drinks the water that's been served to them for lunch or breakfast.
So very important, and always appreciate that very important information here, Zoran. Thank you very much for taking the call. We wish you and all of your colleagues there all the best this holiday season, a happy, healthy, and prosperous new year as well. And I know you're there to help people, so thank you very, very much. Elder law attorney Zoran Basic at basiclawgroup.com. Live with us here tonight on Mottek On Money on 790 KBC. All right. The Dow Jones Industrial Average up 322 points today at 37,404. It was raining money on Wall Street today. The S&P 500 of 48 at 4,747. And the NASDAQ gained nearly 200 points, up 186 at 14,964. Nice bounce back following that big sell-off we saw yesterday. The yield in the 10-year note is back down to 3.88%. Mortgage rates have moved lower again this week. Back below 7% now for the average 30-year fixed. Bitcoin right now hovering just below 44,000. Ethereum at 2,242. Doge at 9 cents. Stay tuned now for the 790 KBC News Blitz with our legal eagle Royal Oaks. This is Frank Mottek. I'll be back again tomorrow evening in the 5 o'clock hour right here on 790 KBC.
It was a picturesque holiday when this storybook town reached a plot twist.
There was a divide in the town, turkey versus ham.
A community split down the middle, just in time for the big potluck.
When Teresa brought out the pork chops, girl, I knew it would get ugly.
Indeed. The next day, Teresa vanished, a victim of meat-based vindication. Will this town find justice despite potluck proclivities? Stay tuned.
Giant Spiral Sliced Ham, 99 cents per pound with a $25 purchase, limit 2.